Welcome back to Investing with Confidence. I am your host, Joshua David. And Al, I bet you thought I was going to sing that one, didn't you?
I was hoping not.
Well, how was my
But
yodel last segment?
that was probably the worst yodel I have ever heard.
Oh, well, thanks a lot about that one.
If you were thinking about a career as a yodeler, I would look for a different plan.
I'll pass on that. Don't forget to subscribe to the podcast wherever you listen to podcasts and on YouTube. Al, as we get into this final segment here on Investing with Confidence, I want to continue the discussion about the smart money and what they are utilizing to create income. We talked about Forex in the last segment, why that's so great for investors. We never elaborated on futures, what that really is. Why might somebody want to utilize it? And these techniques and strategies are available in retail accounts and in retirement accounts.
Right.
So let's talk about that.
Yeah, and that's really one of the great benefits that we have is that those assets are available in your retirement accounts, not in your 401ks or 403bs. A self-directed IRA, a Roth IRA, you can use those assets. Why would that be important? Well, that's what the institutions are using pretty much on a daily basis to boost their bottom lines, to bring cash in on a regular basis. They're kind of what I would call maybe the what if assets, the what if strategies. What if the market continues to go up? What are you going to use? What if the market goes down? What are you going to use then? What if the market's sideways? If it's flat, what are you going to use? What if those things happen? Well, the leveraged assets like futures, forex, and options can be used in all three directions. Options really are a great asset to utilize in a sideways market and kind of a sleeping market. But futures is a great asset to trade for a number of things. Number one, it is almost 24 hours a day. It does have great leverage depending on the component of the futures world that you're using, anywhere from maybe 20 to 1 to over 100 to 1. What you're doing with the futures market is accessing different components, different investment choices like the stock market, all of the major indexes, the Dow, the NASDAQ, the S&P 500,
So you
the Russell.
can trade the stock market.
Definitely
through the
can trade the stock market. You can trade commodities. You can trade precious metals, oil, currencies, interest rates, a number of different things, which gives you the opportunity to be truly diversified. Some people out there that are looking at becoming day traders. One of the disadvantages of that is that if you have less than $25,000 in your account, or if the account goes below that, then you have to either put cash in or you can't trade for a period of time. That's called the day trader rule. If you are trading the same investment, you buy and sell it in one day, you do that 3 or more times in a 5-day period, you're automatically considered a pattern day trader. Then that $25,000 rule applies. It doesn't with futures. So if you want to day trade, and we're not saying that that's what all of our students want, but there are some that do, you don't have that requirement that you're not qualified as a day trader.
And just to clarify, what all day trading really means is in and out of a position in the same day.
Right.
It's kind of it's not really like what the movies portray it to be. It's wild and crazy. Someone smoking a cigar with a bottle of scotch, sweating at a computer. That's great for entertainment.
Sure, it's Hollywood.
Yeah,
Hollywood
but it's just
trading.
Yeah, but it's just in and out of positions in the same day. There's also swing trading, which is available, which
Sure.
you're in and out of positions in days to weeks. That way you let your investments work for you. Then there's like position trading or longer term trading, not buy and hold, but that longer term style. Say someone wants to use that in their retirement accounts. But I must say, I'm a little upset with you right now.
Oh boy,
We talk about commodities and we didn't
Well,
talk about lean hogs.
I thought it was the yodeling thing.
No lean hogs today. What's going on?
No, I just haven't gotten to that yet.
Our listeners need to know that you can trade lean hogs with the futures market.
So that is a component of the commodities part of futures. What
There
are
you go.
commodities? They're maybe the soft grains, sugar, corn, soybeans. As Josh mentioned,
Lean hogs.
Lean hogs, his favorite.
Gold,
but there's
silver.
a number of things. Yeah, gold, silver, oil, natural gas, a number of things that give you the opportunity to participate in different parts of the market. And then the fact that it's open almost 24 hours a day gives you an opportunity to choose when you want to participate. And you really can then manage your assets basically 24 hours a day and you can participate in the global markets.
Yeah, that's the great thing is having the opportunity not to trade all day long, but have the opportunity to pick your trading times. So with the leverage, so let's just say Al was talking about maybe a 20 to 1 leverage. Basically, what that means is for every dollar that an investor has, they can potentially control 20 of that asset. So if you're utilizing that and buying gold, you could potentially control $20 of gold, right? So with one dollar, that's just an example. So one of those key things, I really like what you said about the 24-hour market, especially in retirement. When people are utilizing these assets in retirement accounts, they pick and choose when they want to trade and invest. You're not
Right.
just stuck to 6.5 hours a day during the daytime hours. That's when people probably want to go golfing in their retirement
Sure.
years.
Sure.
Since we've been talking a lot about retirement accounts and strategies and techniques, I bet there's a lot of listeners out there that have an old 401k or maybe an old IRA that someone's managing, or maybe it's just sitting somewhere, especially
Hmm.
like an old 401k with an old employer.
Right.
Can people roll that into their own self-directed and start to potentially protect that themselves?
Yeah, not only can they, but they should. And we see some people that come in that have several 401ks from old employers, and they just leave that 401k with the old employer. Well, think about it. You're still paying those high fees. You're in assets that probably are not producing very good returns for you, and you're really missing out on the opportunity to make better use of the money that you've worked for. So those 401ks, they can all be rolled into a self-directed IRA, and then you are the director of those assets, which you already are in the 401ks. So number one, you eliminate the fees. Number two, you have many more choices. You can participate with assets that will uh, give you the potential to benefit in up markets, down markets, sideways markets. You can have protection on your portfolio. You do not have to ride down and just stay in the market when it's crashing, when it's correcting, and when you're going through a bear market. The pros out there, the real smart money, they know how to make money in a bull market, and then they know how to protect that money. And better yet, then they know how to make money in a down market. And those are all benefits that are available to you. And it's just a matter of setting up an IRA through a brokerage account or brokerage firm. They'll actually take care of the transfer for you. It's a very easy process to do. Once you're controlling your own assets, the number one thing is you're eliminating fees. And especially if you're just letting some money sit in an old 401k, why would you want fees to be taken out of it? It's like somebody, coming into your account every day and just grabbing a handful of money and walking away with it.
That's the old hand in the cookie jar.
There you go.
That's unfortunate. Al, you've been dropping a lot of knowledge here today about, I guess, many different things that the public just doesn't understand. Everybody's so conditioned to do certain things, or conditioned to buy and hold, unfortunately. Conditioned to have brokers, advisors. By the way, some people should have them, but
Sure, absolutely.
it's not for everybody. And I think they're pushing that on too many people that might, it might harm them more than good. And it's unfortunate. And, one of the things that you were talking about earlier is that what if, what if you knew the assets to trade in the evening or invest in the evening? What if you knew how to use leverage? What if you knew how to protect your positions? What if you knew how to invest with confidence? One thing I don't want to have people going through is really going through life saying, I wish I would have.
Sure.
And now is the time to make decisions and take action for your financial futures. Al, it's been a beautiful week and a beautiful start to the month. Let's hear those beautiful words of wisdom.
Well, I'm going to take some of those words of wisdom from Charlie Munger. He's the vice chair of Berkshire Hathaway, Warren Buffett's company. Charlie actually did a lot of the investing for Warren Buffett. He said this: I always say I want to know where I would die so I can never go there. I mean, if you knew you were going to die in San Francisco, stay away from San Francisco. That would be a mistake to go there. In the financial markets, it's critical to know why and how investors make mistakes so you can avoid going there. Conversely, just learn what the smart money is doing correctly and consistently so you can go there with them. Why you want to do that now? Well, because the actions you take today, those are the actions that will influence the course of the rest of your life.
I just got 3 final words. Start knowing now. Same time, same place next week. Until then, retire young, my friends.